Welcome to Charts This Week. My name's David Linton. I run Updater, and wow, another wild week on markets and quite a lot to get through this morning, this Monday morning, start of the week. And then what really amazes me is just the Dow Jones, how we look back over the last few months. This is the US stock markets, the Dow Jones index behaving very, very nicely for a few months. Normal sort of candle days, most days rising, the odd day falling, and then bang, we've got these big long candles with big spikes. Really big action the week before last, and then of course at the end of the start of the week, big recovery, but then last week starting to come off again. So really seeing a lot of volatility in the market, and we will take a look at that. In terms of the trend, the US stock market is still in an uptrend. This is very hard to believe, but on the daily time frame, this is medium term, remember, where we're looking at a daily chart, we're thinking weeks and months ahead, we still do have an uptrend. We're above the cloud. We'd need to close below 1,100 points on the S&P 500 to really have the signs that the uptrend would be over. So we're still bullish on the S&P on the daily trend. The FTSE, the UK market, is really in a slightly different place in that we're messing with this cloud right now. We're back below it this morning, Monday morning, but here we go, we're sort of testing this level. Too early to say, and of course if the US stock market can hold its trend, then the UK market probably will as well. So stock markets are really on a knife edge this week, and we need to stay above the cloud. One market that is looking quite interesting, here we see the Shanghai Composite Index. This is actually a log scale chart. The Chinese market went up sixfold in 2 years, 2006, 2007. Then it halved back to the, well, more than halved, and then recovered. But what's most interesting is that Monday's close on the Shanghai market now closed. We're open in Europe, closed in Asia. Monday's close, we see we've got a new 12-month low on the Shanghai market. It's really starting to look like China is crumbling in terms of equity market, and quite interesting that we're now looking back to this low on the Chinese market. So the Chinese story is not looking so good in terms of its stock market. And if we look at the volatility, a few of you have asked me to comment on the volatility. Here we see the VIX. The VIX index jumped very dramatically in 2008 when we were seeing those heavy falls on the market. It jumped again, of course, last week and the week before when we had these dramatic moves as we saw in the Dow. And so the volatility has gone way up. We're back to the sort of volatility levels that we did see a decade ago. We haven't got anything like this volatility, but it's true to say that volatility is higher than it has been for some time. So the volatility is certainly up as we would expect. And if we look at currencies, really the big story this week is that the euro has broken below the 2008 low. So no question, we've been very bearish on the euro. The fact that we failed to make a higher high, just the Dow theory, the fact that we couldn't make a higher high when the euro started recovering. We've come back and tested this low. 125 was a very key level. It's this top line. 125 is a very key level for the euro, psychologically important. And then we broke that last week below that 125 level. We were then looking back to the intraday lows in 2008. That was around 123.35 was the intraday low. And this morning, we are below that 123.35, 122.80. We really are testing new lows on the euro, and we now have to look back to the sort of 116.40, 117 mark for where the euro would settle next. So really a very bearish story on the euro, making new lows. No support in place there. And if we look at the point and figure chart, of course, we have been saying for some weeks now that we do see the euro dollar back to parity. That we've got targets of 102, 97. It's kind of academic. It's parity. €1 to the dollar. That's what we expect to see. How quickly that will happen is hard to say, but there does seem to be real downward momentum for the euro, so it could happen quite sharply. Here we see the British pound, a very similar story. This was looking like a recovery, and now it's through on the dollar. 144 this morning on sterling. So really, again, testing new lows, bearish on the cloud, looking quite bad for sterling, and really quite interesting. And then if we get to the euro sterling chart, trying to resolve which is the weaker of the two. This is sterling versus the euro, 117.30 this morning. We've broken out of this triangle. We do think that the sterling will come off relatively better than the euro, and we do see this target back to the sort of 130 mark. That's more about euro weakness than it is about sterling strength. And then if we look at oil, really another big story this morning, in that oil is below the cloud very significantly. This is the first time we've had this level of breach below the cloud since the recovery trend just over a year ago in oil. So it looks like the uptrend in oil is over. This is medium-term chart. We're talking weeks and months ahead. Oil making new highs is now looking like it's off the cards. We're through the cloud. Quite a bearish picture emerging there. And if we look at the downside targets, we still do have these upside targets, but this 109 target is about to be unwound. There was another target here that now has been negated. The upside targets coming off the chart on oil is a bearish picture emerging. And we did have a downside target of 71.50 that was given back in the mid-80s, and we're there. We're past that this morning. Exceeding the downside target on oil is bearish. So quite an interesting picture here. Oil has turned. That's really the signs we're getting. And if we look at the short-term chart, we had the sell signal. This is an hourly chart, so it's thinking days ahead. So at the beginning of last week, at the beginning of the month, we had the downward picture on oil. We have to break above 75 to get back into the bullish territory for the week ahead. There's no signs of that at the moment. Oil's testing new lows. A close below 70 really would be the nail in the coffin. We're at $70.50 at the moment, so it's looking quite scary for oil. And then if we get to the 1 minute targets, remember this is the targets on Monday morning. You really need to watch these targets in real time because they change all the time. You get a new upside target developing, but we do have 68.80. This is a target on a number of charts, so it's quite a valid looking target. 68.80 for oil and 65.70. So we're seeing oil back into the 60s on these short-term targets, but watch this picture closely and look at the shorter-term charts. Last of all, looking at gold, quite a few of you asking me to comment on gold. We had an upside target of 12.50, which was met on the 20 by 3, the 20 by 3 chart, $20 box size. It's a big box size. We do have a target at about $1,500, so we could see another couple of $100 upside. But the shorter-term picture at the moment is watch the 60-minute on gold. That's the chart to really keep an eye on. Is this short-term trend still going, or is it over? That's it for this week. Until next week, happy charting. See you then.